for the brilliant introduction. So welcome everyone to Fintech Search webinar. Will Fintechs continue to shine or fall under the shadow of big banks? As mentioned, I'm Mikael Gromek, today in the capacity as a Forbes contributor and a little bit the Fintech veteran. So I'll be presiding over today's discussions. Before moving to the panelists as such, I just would like to underline some kind of technicalities. So thank you so much for those of you who have submitted questions to the panel beforehand. We have received plenty of those. For those of you who would like to submit questions, you can use the Q&A button here on the lower side, on the left side of Zoom. Please do not use the chat function. We will give our best to go across the Q&A questions that you have submitted and answer them in a later part of the discussion. We have a fantastic panel today. I have what I'm sure you have seen from reading individual full bios, but let me introduce them briefly before jumping on to the first question. So on one side from Dubai, we have Salman Jeffrey, Chief Business Development Officer from Dubai Financial Center Authority. He is a member of management team responsible for clients and driving the 2024 growth initiative, former .com entrepreneur with operating and advisory roles at Big Four, Citibank and Oliver Wyman. Then we have Anna May, Fintech leader at PwC, focusing on a collaboration, cooperations model between Fintechs and the banks, primarily with a focus to Central Eastern Europe or in Central Eastern Europe, co-author of the AI book, expert at the European Innovation Council at the European Commission.
Good morning, everybody. Hello from Warsaw, and I'm very pleased to be part of this Fintech Search webinar today.
Thank you so much, Anna, for joining. We have as well Mike Cunningham. He has been a banker his entire career and still wakes up exciting to do banking stuff. He has been building banks, I think 3.5 until now. He is a Barclays veteran with 12 plus years of experience, followed by 8 years of ADCCB in the UAE and a failed attempt to build the region's first truly digital challenger bank. Mike is now traveling, or has been traveling potentially before COVID-19 between the Saudi and the UK capital as he drives the digital agenda for Banque Saudi Fransi.
Morning, everybody. Great to be online with you today, live from the Lake District in the UK.
Thank you so much. Thank you so much for joining, Mike. Before we start, we just recently, Intratech Australia has asked its members if the banks are doing enough to facilitate cooperation between startups and the so-called incumbents. And before I will give you the results of this poll from Intratech Australia from 2019, it would make sense for us to ask you if you feel that the bank fintech collaboration has been as it's supposed to be. So potentially now in a second, you will be seeing the poll coming up. It's supposed to appear on your screen and you will have a very short amount of time to select the correct answer. So interestingly, coming back to Intratech Australia when I started, actually the answer was 83% of the fintech founders have specified that they are feeling that the cooperation between incumbents and fintechs have not been as effective as it could have been. Here, when it comes to our poll results, we see it's maybe an 83%, but it's 67% of individuals basically specify that things could be done better. And then zooming into the first question and turning towards the panel, Mike, based on your experience and like the recent development so far, what do you think is upcoming? What do you think that the banks could be doing better? Is there anything that the banks have learned during the last 6 months, 12 months, anything that you feel is like ahead, what would be important for the community?
Yeah, sure. So the $1 million question, hey, one that, you know, I keep hearing over and over again. No crystal ball, not convinced that they've got exactly the right answer, but I think there's a number of conditions that are still still missing to be able to truly foster this kind of partnership between big bank and fintech, or even just to allow fintech to flourish in and of itself, if you like. And for me, those four conditions are, the first one's around culture, and that's the culture within the bank, and also the fintech to a lesser extent. Second one is regulation. Third condition for me would be the technology that banks have today. And then the final one is on the fintech side, and it's their readiness to partner, and also the business model that they have. So, that's at a very macro level, but let me kind of try and take each one of those in turn, if I may. And we'll start with culture, right? If you've known me for a long time, then you'll know that I believe that culture is the be all and end all. That old Peter Drucker thing about, culture eats strategy for breakfast. Fully subscribe to that. And it's culture that gets stuff done and makes the impossible possible. But, what really is culture, right? My favorite definition is around, it's the ideas, the customs, and the social behavior of a particular people or society. So if you start to break that down, and let's focus on ideas, right? So what does that mean to fintech or banks? The first bit is, what is it that the bank wants to do? What is it that the bank needs help with? And how do people in the bank behave towards these kind of partnerships in fintech? The second element of that definition was around customs, okay? So the customs that the bank has, and that means for me, how open are these people? Does the bank have a way to approach partnerships? And one in an easy way, because we're not always buying an Oracle or a Temenos and, have to go through very, very detailed due diligence on that. But do we have a fit for purpose kind of approach to partnership and custom, if you like, for startups and fintechs that are more kind of early stage? And then, for me, finally, it's around that social behavior. So how do we behave as human beings, right? Are the people tasked with building these partnerships, do they have the right mindset? Are they confident in their own position, within the organization? We all know that turkeys don't vote for Christmas, right? And then it's also that bit around, can fintech adapt their behaviors to be maybe a bit less startup and a bit more old school, if that makes sense. And culture, it always starts with one person, the person at the top, the leader, right? People see how that individual leads, lives their life, walks the talk, and that kind of unifies that bond and approach. So I think when you look at the culture side in big banks, it starts with probably the CEO, chief digital officer, and that, in summary, is what brings alignment and partnership. And cultures on both sides have to either align, or at least they've got to be respectful of one another's beliefs.
Mike, have you seen that there has been any kind of a shift? Because when we would have this discussion around 3 to 4 years ago, then I feel that the point would be similar. So then, of course, everything starts with the culture, but this fintech started to grow bigger. And then we have the unicorns. So the grandfather of fintechs, PayPal, and then as mentioned, with Revolut, with Monzo in the UK, a little bit with Ant Finance on the other side of the world, with M-Pesa. So in the past, the banks had a different attitude of maybe we should not really care about fintechs. Maybe they will die out, they will go away. We know that they will not go away really. So from a culture perspective, have you seen that there have been any kind of shifts? And have those shifts, in case there have been shifts, have they been forced by the sense of urgency that they feel that they have to change, or more that they feel that the banks, so the fintechs are coming a little bit closer and closer, or not at all?
Yeah, look, I think it's more down to so there's definitely greater understanding, but I also think that there's just greater respect. To see somebody like Ashok Vaswani, who's CEO of Barclays retail business, sat on the same kind of stage with the CEO of Monzo and the CEO of Revolut, shooting the breeze, talking about similar issues. that they have just shows that, you know, the big challenger guys I've just got an equal seat at the table now. And, you know, when you look at some of these kind of unicorns now with multi-billion-dollar valuations, they're worth more than, you know, some of the smaller banks. And when I look at Monzo, it's got a customer base that's bigger than some of the old legacy retail banks that we have. So they're up there now with them. They just need the balance sheet, I guess, to follow through and continue to grow. So things are definitely changing. Sadly, I don't see it as much in our part of the world. But again, like I say, it's down to people inside the banks to start to drive that. And whilst we still remain potentially insular and protective, then I'm not convinced there's great hope for that. We need to let fintech come in and grow and get that equal seat at the table.
And before jumping to Anna, as she has all of the experience of actually facilitating or helping banks to find the partnerships in fintech, you know, there have been a lot of different attempts how banks tried more or less successfully to overcome those issues. One of the attempts have been connected with accelerators, incubators, a lot of other terms that end with aters. Have you seen any kind of successes? Would you say that this is a way forward? Or let's assume that we have participants who are joining us and they run a fintech and then they would like to work together with a bank. What would be the best? I know it's very general because we have a lot of different types of fintechs, a lot of different types of technology, but what would you say are the clear don'ts? So what they should definitely not be doing, or is there anything that has changed where you would say, hey, accelerator is a good way, incubator is a way to go in?
Yeah, so look, I think, you know, I've seen probably 2 or 3 really successful accelerators out of Europe, probably the best ones. And, you know, I'm thinking about, you know, my old kind of alumnus, which is Barclays and Barclays Rise, partnered with Techstars, did some really good stuff within there. I think, you know, my old buddies over at BBVA have done a great job, you know, on this side of thing. But I also believe that we still, as big banks, like to do a lot of that innovation theatre. And therefore, because of that, sometimes the accelerators that we do, they become more from a vanity perspective because we want to be seen to be doing this. And look, you know, we might be old school, but we can dance with the new kids on the block type stuff. And you know, it's that mindset of making sure that when we're doing these things, that there's a real end state, there's a real potential partnership with it. But again, and you know, this brings me on to some of the points that I was going to cover. You know, sometimes the regulation just doesn't exist to be able to continue with that partnership. Sometimes the technology isn't there, for instance, as well. And I think you know my second point earlier around regulation, regulators have got a huge role to play to allow fintech to thrive and to let banks partner with, or at least support fintech through things like bank as a service. You know, in our region 3 or 4 years ago, there was no appetite for true fintech partnership or, you know, bank as a service, you know, rent a license, that type of thing. No one understood it. No one knew what the impact was or the opportunity that it presented. And therefore, we just buried our heads in the sand. And I know this because I was on the receiving end of it as I tried to launch my digital bank. Clearly, no one wanted to discuss licensing with me. I didn't have the right connections. You know, no one wanted to partner on a bank as a service basis. A lot of the time because, you know, remember what I said about, you know, culture and turkeys not voting for Christmas? It was seen as a threat, but also everybody just believed that it was something that they could do. UK's been very different. And, you know, perhaps naively, I thought that, well, if it works in the UK, it's going to work in the region. But I think it was just too early. Now, things have changed, no doubt. 3 years ago, still nascent. Now, I think it's a lot better. And, you know, when I look at my regulator now in Saudi, SAMA, who I believe are truly leading the way on this, you know, they looked at the UK FCA model, They sought to build upon that successful model. There's no vanity accelerator that's in it. It's a real sandbox. It's a real license that you get. It's real potential to partner with a big bank. And I think, you know, coupled with that, the changing of regulations to allow digital onboarding, the ability for consumers to truly shop and buy online and buy financial services like loans, fully online, end to end, with no paper, all with kind of, you know, digital signature, makes a big difference. And I think it's because of this and a regulator like SAMA that's ready to kind of lead the way that things are going to move. But regulation needs to exist to enable that open and free market. And I think only with competitions will banks react and seize the opportunity. If we get forced to do it, and I've seen this in Europe, then banks just do the bare minimum to comply. And if it's not allowed, full stop, this kind of open and these banking partnerships, then look, you know, we're just going to stay all warm and fuzzy in our natural oligopolies, doing double-digit return on equity every year, and it's all well and good, right? So you know, that regulation piece is super important.
And before, because we'll be covering regulation as well, so let us of course park the discussion, because it's the foundation of the development of the cooperations between banks and fintechs. But Anna, as I'm joining from Stockholm, often the Central Eastern European banks are being seen as an example of what can be done better. Because officially from the Nordics, nobody will admit that, but we have the legacy systems where everything has been created on COBOL. And then I have spoken to one of the incumbents here, and they told me it's around $500,000 to just erase the fax number from the invoices that are being sent into the customers, because you have to just drill down in all of the different systems and like fix the different holes. Would you say, you know, reflecting on this, what Mike said, that is there any kind of different development within Poland or within Central Eastern Europe when it comes to the partnerships, because there have been some major shifts and some major partnerships recently?
Thank you for your question, Michał. And yeah, before jumping, you know, just into the Central Europe ecosystem, fintech ecosystem that I'm mostly covering. So I would like to say, because very often this comparison is being made that, you know, just Central European banks are even perceived as fintechs. They are incumbents, they are traditional players, but they are very innovative and they don't have these legacy problems. And of course, they have very advanced core banking systems. So of course, this is true, this is valid. So they are perceived like, you know, just as other fintech players very often. And I can give you examples of mBank or Alior Bank, some of the banks being built from scratch in the greenfield. That's very much true. But I will also build on what was said before, and Mike, you know, just raised this. So if you are looking at the bank fintech partnerships, we can just see them on the individual level. We can also have another layer when we look at the programs, accelerators, hubs that you mentioned. But the very valid point here is really the entire fintech ecosystem. And of course, regulatory framework is one of the crucial components. It's not the only one. So what I mean is, of course, the like comprehensive, true innovation ecosystem. It's still, you know, it is still valid for fintech, but of course it's not limited to fintech sector only. So what I would like to underline here is the existence of regulatory sandbox, which is not that much, you know, just common in all the European geographies. So of course, you know, UK is in the forefront of that. But, you know, in Central Europe, we only have like the true regulatory sandbox in Lithuania. And of course, this is like a source for many innovative fintechs, not only Lithuanian ones, but, you know, just looking from the European perspective. But, you know, just you can't really speak about accelerating, you know, the bank fintech partnerships without a true regulatory sandbox. And even Poland being in the forefront, you know, the Polish banks are really in the forefront in terms of innovation in the Central Europe. But of course, there is still like a real true comprehensive regulatory sandbox and regulatory framework. lacking. So I would like to point this thing. And in terms of partnerships, of course, just all the European territories or geographies are quite active in terms of new partnerships being built between banks and fintechs. Although we see some changes through this, just very trying period of COVID-19. And definitely I would point out like two things. One is that, in the initial stage, we really witness a kind of slowing down and some of uncertainty in terms of, partnerships, but also any kind of investment in the fintech sector. But now I really witness a kind of, I would say, just recovery, but in terms of, just changing priorities or fine-tuning priorities in terms of bank fintech partnerships and investments. So we see some acceleration. So we see some new projects coming into the sector. And of course, just fintechs are quite, just fast and agile, and they have a different culture as it was raised before. But banks, they also reprioritized, and then, just they see like, just some focus areas that they would like to cooperate with fintechs.
A little bit to reflect on this, what you said, Anna, on primarily on the regulatory framework, as we will jump to it. Just a personal reflection, because I've been educating like the Malaysian regulator on peer-to-peer lending some time ago. And what they said, that they, of course, they have the mandate from a government to not only to regulate the market, but to develop the market. And then when you go to the Swedish regulator doesn't have the mandate to develop the market. So this way, this means in Kuala Lumpur, once you release some kind of regulation, for example, connected with crowdfunding, then after a quarter, you can ask all of the crowdfunding companies to sit around the table and ask how did this regulation impacted you? And often from a regulatory perspective, we don't really have the possibility in Europe, because lots of different regulators just don't have this component and develop in their policy frameworks, which is coming from the legislator. Do you see that this is something that will change? Do you see that more countries will be following, like Lithuania, which has clearly the component and develop, or is this something that we just pretend to be our own islands and then we just don't look to the neighbors what they do?
Even if they don't have this developed component involved, I would say this is much about facilitating and stimulating the market. So basically facilitating the relations between different stakeholders, banks and fintechs, so new entrants. So of course, there is this component involved. If we go further to the development, I'm pretty sure that this is the direction to go, because there's a lot of work being done in the innovation field, covering, just blockchain, covering digital assets, covering cloud computing, which is of course very important for the financial sector, not only fintech, especially right now. And we see some, just like fresh air coming into this innovation part, and this is very needed. Because, just for also the AI and the transparency of AI, the ethics of AI, there is a lot of different issues involved, and definitely regulators will follow this path. But I wouldn't like to focus on the regulatory part. I would like to come back to the partnerships, because I think what we really witness now, these are like, you can look at this, from different angles or different perspectives. And I said that, just what I see is like a gradual acceleration, if I can just call it like this. So in terms of the new projects coming into the banks, but of course, in terms of the intensity as well, probably we don't have that many, just new projects as in the Western Europe, but still there is like a lot of, dynamics in the bank fintech partnerships, also in the Central Europe. And I would say that the very important thing about the scope and priorities of these partnerships, also investments, because of course banks are much more selective right now, and of course they focus on the just validated technologies, the technologies they can really bring very quickly to the market, test out through fast POCs, just through pilots, and basically just the technologies and the business areas that are in line with the strategies, which mean, first of all, like, revenue protection, customer retention, as well as cost reduction. So if we look from this point of view, there is like, just new projects and new companies offering, I mean, fintechs offering these solutions. And I have a great example, of one of the implementation that is, just underway. And it really happened in a very difficult, trying times of COVID. And it's a very recent success story from one of our alumni Collider programs. So Collider this is the PwC accelerator, quite international one. And I think it's worth mentioning because it really connects like, just Europe and Middle East. So we have the example of InvestSuite, a robo-advisory fintech or a wealth-tech fintech that, after successful POC with one of the leading banks in the Middle East, they are now just underway with the commercial implementation, and they will be ready with the 3 solutions for this, just leading bank in the Middle East early autumn. So this is what happened during the COVID time. They also managed to raise some new capital. So like a follow-on round from the existing investors. So I think, just there is like a lot of quite, shifting priorities and strategies, but still we witness like a lot of new projects coming into the digital transformation field.
But and I just to reflect on the development, because there's one thing which you have said, what has been very important, that of course there might be an additional shift in comparison, so in connection with COVID-19. So suddenly when COVID-19 has come in, it might allow the banks to reevaluate the different type of partnerships. And it maybe makes sense to ask those questions to our participants who have been joining us. If their fintech investments, if you are investing into a fintech, or if you work in a fintech, or you are fintech founders, if they have been impacted by COVID-19 at all. And again, I would kindly ask you to vote in a second when this poll will come up. I think we'll wait the next 2-3 seconds. And then exactly, I hope that you will be able to see the results as well. But then 48% of the participants who have been voting have basically said that there is a strong impact on COVID-19 versus the different types of fintech funding. 8% have stated that there is no impact at all, and 44 are maybe joining us from for different other purposes and not working in the fintechs or banks. So we see that there has been a strong impact. And before joining today, I reviewed that CB Insight has just released on the 20th of April a review that specified that the fintech investments are technically down to the level of 2017. So we have seen like a rapid decline. And then to connect this back to this, what you said, Anna, looking at the questions that we have received from the participants, so there has been a question from Mehdi that asked, so would fintech to fintech partnerships, would they not be way easier to be completed than the fintech to banks partnerships? Because it seems that we have not seen this many of those as well.
That's a very good question. Thank you for that. But just before coming to this question, I will just briefly comment on this investment side, because definitely we witness like a drop in the valuation of fintech companies. We also see like just the downsizing of the investment, especially in the early stage companies. This is of course just we all like just validated mature companies, and I think it really stays relevant for both partnerships and investments, that we see like just validated technology being implemented in the banks, and also like just mature companies and not the early stage companies. And there are some like either follow-on investments or new investments coming into the portfolio, but of course both VCs but also banks, CBCs, they are much more focused on the existing portfolios. So fortifying, reviewing the portfolios, but not necessarily, just taking risk into the new investments. Although, just I have example of the recently launched like Fiserv CVC fund. It's a new fintech fund that has been recently announced. And basically, so there is, again, just some new investments coming in the market. And coming back to the fintech or bank fintech partnerships, of course, traditionally, we have been talking about bank fintech partnerships, but definitely there will be like, just new fintech partnerships or even, just acquisitions, I guess. So because in order to strengthen the entire value chain and to deliver the end-to-end customer journey, so there are like, some special competences that can be covered by different fintechs. So of course, I don't see any reason for which, just the fintech partnerships or even investment should be excluded. And I really believe once the market develops, once the sector develops, there will be more mature fintechs. Definitely, we will be witnessing more of the fintech partnerships and even investments in the. Although there are some examples of companies like Raising the Fintech, they, I think that last year they bought like a small German bank. So this is like, the vice versa, not only banks buying fintechs, but also like big fintechs buying some smaller traditional players.
And then one additional question from Magdalene is, do you think that there will be banks in Central Eastern Europe that, based on COVID-19, would just embrace to go fully digital? So then they would just decide to completely abandon the different offices, the branches that they have, and there will be like some kind of a major shift, or is this a little bit too early to say?
Yeah, so basically we already have some like digital only or mobile only banks or such kind of venture. And of course, not only like traditional players just building their own ventures into this digital field, but of course we also have like very brilliant examples of neobanks. For example, Ion, like, just the banks based in Belgium. They launched their services in February, and that's a digital only proposition. So of course we'll be seeing this kind of, just players. But of course I assume that the question, is really more relevant for the banks, for the traditional players. But definitely we will see some shifts. And I'm aware of some of the digital ventures that were started before. Of course, this is now the question of changing the strategy or fine-tuning the strategy. So we will see. But definitely one more thing I would like to add, because I know that we are running out of time, but definitely one of the very important factors that we haven't touched upon so far is tech, big tech companies. And basically, what tech companies, especially the giant techs like Google, Amazon, what they will do in this area. Of course, this is a very good time for buying, and we know they are just doing a lot of shopping in the market every year. They're very active in the M&As. So we will definitely witness a lot of, just investments being done by big tech, and of course, a lot of partnerships. And then, just in the financial services, in the fintech, the big tech will also change a lot.
And this brings us, of course, to the next question, because when we think about the big techs, and of course I completely agree with you, but we have seen that Facebook made the decision to let's embrace and do our digital currency Libra. Okay, it was announced, and Visa, MasterCard have joined, and they had to pull back. Then suddenly they are in the same regulatory challenges and the same regulatory frameworks. Because then, technically speaking, we can say that fintech is international, but still the regulatory framework is not really international. But before we jump into the topic of the regulations, one of the questions, and I will of course still ask you, saying, what do you feel is the key obstacle for the fintechs from a regulatory perspective? It would make sense to launch a poll to ask our participants where they are from. So then this gives us a better perspective, because very often we are very centric towards the place where we come from, and we anticipate that this is how the regulation looks globally, but it isn't. So please be so kind to answer the questions where you are coming from, and this will of course allow us to zoom in to the particular regulatory questions a little bit with Anna and with Salman. to see what is upcoming, what are then the key challenges. So we see that we have 67% of participants have joined us from the Middle East, and 15% from Europe, and 15% from Asia primarily. So here, Anna, to just make a little bit the connection to Salman, from your perspective, in case you would be the regulator as of today, and you sit on the gremiums with the European Commission, what would you like to have changed or erased or modified immediately? In case there's this one regulation what really bugs you and like, okay, I really would like to get rid of this. What is this?
There is no simple answer to that, really, because this is such a complex environment, ecosystem that I mentioned, even, with AI. And I'm aware of the digital finance new agenda of the EU. And basically, this is now under, just revision because of the COVID as well. So, and there is a lot of implications there on the payments, on the AI part, on the use of, just cloud computing as well. And then, just that probably, just we need like a comprehensive regulatory framework, even the digital identity and like, just data passporting, digital identity passporting through the entire EU ecosystem. There's a very complex regulatory framework, but what is good is really the willingness of the regulators and, just any of the supervising bodies across Europe, not only Europe, of course, just to be more and more open and flexible and adaptive to what is going on in the technology, in the social change. So, and then, just I really think that regulatory framework should follow some of the changes. Of course, sometimes this is like the first step to shape the entire ecosystem, but I think they should really reflect also what's going on in the entire ecosystem. So that's great. So it's not a simple answer, and, just we don't have that much time to a deeper discussion. So I really enjoyed your questions and questions from the audience. So thank you so much, everybody, and thank you, Michał.
And then I think this brings us more to Salman, as you are working on intersection with regulations, and then you work with the different fintech companies, and you have this experience coming from Big Four. What would you say, coming a little bit back to the questions that we have from the audience, what is your key, so Salman, what do you see as a key regulatory piece that is hindering the future growth of the fintech industry? So it's one of the questions from the participants that have been submitted in the Q&A board.
Yeah.
How do you stay on top of regulation, everything that is going on?
Well, let's take a step back. First of all, good morning and good afternoon to everybody. It's a real pleasure to be here. It's a really great discussion and a great group of people in this panel. Mike talked about Ashok Vaswani, and it takes me back to, dates me a little bit, because back in the early 2000s when I was at Citibank, trying to acquire credit card customers through alternate channels, which was moved from newspapers into this new and amazing thing called the internet. The internet was the alternate channel. And back when Anthony Jenkins and Ashok was CFO of the cards business, back then, if you had discussed today's agenda, people would have scratched their heads, because banks, as Mike knows, have traditionally been at the cutting edge of technology spending for about 30 years, right? So banks were one of the first enterprises to introduce computing en masse into product development and distribution. But times have changed. Look, a lot's been covered. Let me try and organize my thoughts. The question that I think you're really asking is really about how does one develop markets, right? I mean, no one really cares about regulations for the sake of regulations. The question is, how do you develop markets? And the answer is there's no real good answer. There's many reasons for it. Mike referred to culture. There's different levels of education, different histories, different risk appetites, different perspectives on risk taking. So there's no really good one way to answer the question. The way I would do it is I'll spend about a minute telling you about how we've done it in traditional finance, and then we'll apply some lessons learned to what we're seeing in the digital and fintech space. Look, in 16 years, what we did to develop a financial market, right, was essentially to aggregate around regulations, capital, and talent. And the results are pretty spectacular, right? 25,000 people, 25,000 people, 2,500 firms, 600 regulated entities, 700 billion in assets. But you're right, regulations are a necessary but not sufficient condition. What brings it all together is an umbrella around enlightened national policy, and airlines, a hub, quality of living, education, all those things, right? So the regs produce a necessary but not sufficient condition for sector development. Now the question is, how do we apply that to the development of the fintech sector? A couple of observations I'd like to make. One, buyer beware. We are absolutely fintech focused, but our own lexicon is changing. We're talking a lot more about the digitization of regional economies rather than simply focusing on fintech, although fintech makes sense because we are a financial sector. Yes, you're right. What we did do in our development was we did change the regs. So we were the first, and for those who don't know, the DIFC has its own independent regulator called the DFSA, which is not the lender of last resort for the UAE, which is an important disclaimer as well. Mike nods his head. What we did then is, which I thought was really, really groundbreaking, was to introduce the region's first regs on crowdfunding, which I thought was far-reaching and showed a bit of impetus for innovation. But that was just one piece, because over the last 4 years, environments were changing, right? So then what we did is, and Anna's completely right, acceleration is a first step towards ecosystem development. And that's what we did. We established the region's first fintech accelerator called the Hive. We did a partnership with Startup Bootcamp. And all of those things started to generate this aggregation of talent and capital in the same area. We've developed a future finance strategy. We announced a $100 million fund, which it's public information now that it's going to be scaled up to 300 million at the Dubai level. Capital is important. It's not about writing checks. It's about building the ecosystem, creating markets, and investing in businesses that will be successful, right? Now, the results of that, I'll come back to the regs in a second. The results have been quite interesting. We have 150 odd fintech companies in the DIFC. These are proper operating companies. These are not, tests or sandbox companies. There are 150 bona fide companies. And at last count, and we can debate this a little bit, but we think that there's about 220 fintechs in Dubai. There's 400 in GCC. So by the narrow definition of fintech, that model has worked. But there's a lot of work that's upcoming. So you asked about regs. I would flip the question around. What problems are we trying to solve, right? What problems are we trying to solve? If you look at where we're at, we are a crossroads economy. We have significant KYC, AML risks to our banking system, manifest in the FATF reports as well as our own assessments of the market. We are at the middle or the sending or receiving end of the 4 or 5 of the largest remittance corridors in the world. So payments and money services is a problem that has to be addressed. And so our regulations try to follow those problems, right? We have a money services and payments regulations that got finalized in Feb. And the uptake from financial and non-financial firms has been really amazing. So that's going to be a really, really important part of the equation. I want to go back to something Anna and Mike said also, which I think requires some further emphasis again, because I agree with them completely. 4 years ago, before we kicked off our strategy, we did our requisite tour of the West Coast and talked to a lot of people. And I'm biased to, of course, the New York-oriented financial technology conversations, but we had an interesting debate. And what we found is that we found the dreamers on the West Coast talking about the demise of banking and the disintermediation of banks and going around banks, which I always thought was at best naive, at worst silly. In the UAE, look, back to the question of how do you develop markets? It depends on your local situations. Banks had to be part of the conversation because they are the incumbents. And more importantly, as Mike will tell you, banks are the largest repositories for customer data, right? Mm-hmm. Today. Now that's going to change, right? That's a critical dependency. So looping full back to the question at hand, I think we've taken a sensible approach to it, a rational approach to it. But let me pause there. And before I keep going.
No, of course. But just to reflect on the questions that actually come in from the audience at the same time, and to build them into your narrative, because from a regulatory perspective, from a public perspective, very often we either have the top down or the bottom up approach towards fintechs. So either it's a little bit the regulator that says, I now hold the menu, and now I make sure to tell you what's supposed to be in the menu, what you can order, or it's rather the bottom up approach when you have in Central. In Southeast Asia, primarily, you have the bottom down, the top down approach that you have to apply for licenses first. And in Sweden, it's the other way around. You have to first come up, and then the regulator says, "I don't know what this is. Let us try to find this out." And the question that comes back from the audience is: do you think that the current stage, the fintech ecosystem in the UAE will reach the level when it's completely saturated, that it will like develop itself? Or would you rather argue that now still the public side has to step in and provide some kind of a funding for fintech companies? Sorry for a very long question.
Okay. It's okay. I'm trying to cram some answers in because I'm aware of the time constraints we have. Look, I'm a former consultant, so old habits die hard. I have to make a reference to the S-curve. We are at a stage where industries see there's an explosion of activity, a large number of people jump in, capital starts to be allocated, and a separate conversation maybe for another time is the role of growth and venture capital, which is something relatively new to our region. But typically then you have a rapid explosion of new companies, and then you start to have a tipping point after which many, actually the majority, will lose, and then you start to have winners emerge. I would argue to you as an optimist that we're not at that stage yet. I am less concerned about the vast number of fintech companies that may be in the market. I'm actually more concerned about the innovation and starting to see how a combination of entrepreneurs like Mike and advisors like Anna and financial sector developers like myself can start to create the conditions to maximize the success for those that have the best business models. Now, again, we don't pick winners, the market does. Our job is to enable. And enable means, from a regulatory perspective, not over-regulate. Please keep that in mind. I mean, if you look at the top talent in the world, the US regulations are, is there a fintech regulation in the US? No, there's no such thing as a fintech license in the US, right? But it's a different ethos. It's a different bottoms-up, innovation-driven culture, right? So our job is to enable and enable the success. From a regulatory perspective, I think I would err on the side of picking the problems that are most urgent, testing through sandboxing. I do take the point. Sandboxing is important, but it's got to be done the right way. Digital onboarding, I completely concur with Mike. I mean, the challenger banks that we spoke to and the payments companies, they cited the inability to onboard digitally and therefore achieve the scale that they need as a single biggest driver. I'm happy to say, by the way, as a slight marketing note, that our regulator does accept digital onboarding. And we've had clients who are working with the Onfidos of the world. So I think things are changing. The last thing I will say is again, context dependent. For a place like the Middle East with significant exposure on the KYC AML side, it is very, very important to get it right. Being off on ICOs or cryptocurrencies by 6 months to a year in the long run will not make a difference, right? I would argue that if you look at the digital asset space, let's look at asset classes that are indigenous to us. In the case of the Middle East, real estate, that's a no-brainer, right? That's a problem that needs solving as opposed to our currency. And we can debate that. That's just my personal view. So.
But when it comes to your daily work, let's say you will finish this webinar and then you are, off to go to work for the fintech companies to make sure that that UAE stays on top of the regulatory frameworks. What is upcoming within the next, or anything that you could share within the next quarter, or within anything that you will be releasing that will have a major impact for the fintech companies, as most of the participants have been joining us based from for Middle East?
Yeah, it's what I'm able to share is tricky, but I can speak factually about a continuation of some of the things we'll be doing. I think this year you will see it was slightly delayed by COVID. You will see a formalization of growth capital around the Dubai kind of innovation future district. I think that's going to happen this year. So you'll see a consolidation of some growth capital with the DIFC and some other entities this year. I expect there to be some additional public consultation from the regulator, topic areas such as digital assets, things like that. You'll see announcements from us on ecosystem development. This refers to supporting regional champions, local champions, as they start to aggregate businesses around customer data, applications, and value. So that will continue. You'll continue to see partnerships, and you'll continue to see us trying to go regionally and globally to seek and find the best and brightest entrepreneurs to help solve the problems that we have. So expect continued activity in those areas.
And to slowly like close up and go across two additional questions that have been submitted by our participants, of course, as briefly as we can. Salman, where do you see the biggest increase in demand from a fintech perspective? Like something that you have not seen half a year ago, that's suddenly it's like at your door, some kind of fintechs that have not been there. As well as in case there's any kind of a fintech that you admire the most. That's one of the questions. Anything that surprised you recently, and I would like to pass on to other participants as well, to Anna and to Mike, in case we could just go across and say where do you see the biggest demand coming up, upcoming and post-COVID, as well as which type of fintechs do you admire the most? This would be lovely.
I'll keep it general. I'll say that it is absolutely the case, I think, as Mike mentioned in his introduction, that the case for digitization has been absolutely accelerated and compressed. So platforms in our business that enable and facilitate the onboarding process and access the digital access process to financial products. I mean, there's a sharp upkeep there. RegTech continues to be super important because the business of forms and signing stuff and verification in person, that entire model has changed. So we're seeing a lot of activity there. I will refrain from reference to any one particular firm.
Of course. And Salman, is there anything that you would like to share with the audience where you feel that I didn't ask you? Any kind of anything that you feel that we did not touch upon that, but this is like so urgent? Anything that they would like to know? Anything?
That's a very dangerous open-ended question. But let me pause and just say, first of all, thank you. It's been really fun to share some time with the panel. But I'm eager to hear my colleagues' views before we adjourn.
Of course, Anna.
So in terms of just areas of focus. For the fintech businesses, definitely what we see, it's like a lot of traction into the digital payments, digital assets. So what was already mentioned, so by Mike and by Salman, so projects around digital transformation. What I would love to add to that is, of course, just data analytics and data-driven, projects. So especially in the predictive analytics. So new technology, but also new ways of predictive, of forecasting, of modeling, not only for any, just customer-related behaviors, but also for the risk mitigations for, like credit scoring and so on. And then, I would love to see more like, cooperation in the cross-industry level or, cross-industry approach. This is the entire concept of the open banking, but definitely even with the COVID situation, but also in the post-crisis, post-COVID situation, then we will have to deal with any, just health tech related, med tech related issues. But the cross-industry approach will be a great one. And then, just in terms of the fintechs, of course, I won't be specific at all. I would be more general. Of course, I'm really impressed by the quality of fintech companies that we have on board, within our Collider program. So definitely any of our alumni, but also, just the current participants, they are worth of mentioning.
Thank you so much, Anna. Michael?
Sorry, that was my pleasure. Thank you so much.
Thank you so much.
So look, I would love to see a Monzo, a Starling kind of arrive in this region and slap us across the face, basically. But who knows? Maybe, just maybe, there's a homegrown one of those on its way. So watch this space. And I think, honestly, fully kind of echo what Anna said. If anything around data, analytics, machine learning, artificial intelligence, that for me is the last final bastion that is truly going to be able to transform our operating model as a bank. That will change the way the business model can function and the way we operate, and it will be a game changer. So any fintechs out there that have got some cool stuff, please come talk to me. I'd love to hear more. Thank you for having me. Fintech Surge, Mikhail, always a pleasure to be hosted by you too.
Thank you so much. And then bringing us to the last poll, after the entire discussion that we had from cross-industry corporations, bottom-up, top-down corporations, different aspects of culture and technology, the last poll is about who, while moving forward, which players have to change the way of doing business in order to make sure that we can facilitate more partnerships. Please be so kind to vote now. Still waiting for the last results to come in before they can be shared. It's very interesting. Then, of course, we need two participants for a tango. So it's mostly the banks, but it's nearly equal with both. So it seems that the cooperation needs a little bit of adjustment on both ends. So having this said, and for those of you who have joined us today, please look around you. You see 3 different executives who are actually working on a daily basis in order to facilitate and improve the cooperations between fintechs and the banks. We have to, of course, be greater than the challenges that we suffer in comparison with COVID-19. And the time that we had was very, very limited today. But it's very important to underline that we are not going away while we will be now leaving this webinar. So please feel free to reach out to us on LinkedIn. I think all of us are very, very accessible. And it's our goal to be accessible for all of you, to send in those additional questions. And we hope that we will be able to see each other in person in Q4 2020 during Fintech Search. So we actually planned initially to do that. And then, of course, please feel free to approach us in person and send us the questions before, as you have done now. And it's my big pleasure to be a host for today. And it's slowly the time where we have to log off. So thank you so much, Fintech Search. Thank you so much, Anna, Mike, Salman, and have a wonderful afternoon, all of you guys. And now I hope to see you soon.
Absolutely. Nice to see you, Anna and Salman. All the best, Mikhail.
Thank you, Mike. Thank you.